Hello guys, welcome to Austin Bina YouTube channel. On this channel, I teach how to navigate the forex market. So if you are here to learn how to navigate the forex market with precision and accuracy, make sure you subscribe to this channel because you're going to be getting a lot of content on how you can get that done, right? So very quickly, without wasting much of our time, let's quickly get into this video, right? So this video is just a review on the trade I took, right? That fetched me over. Currently, I'm still on the trade, like for more than a week now. I've been on a trade for more than a week now, right? So and we have already backed about 300 pips now on this trade, right? And we are still expecting more, right? We are still expecting it to give us even more, right? We are still expecting to give us even more. That's almost about 400 pips already now. All right, guys. So I'll just take you guys through all my analysis because I know this is going to be helpful to you guys. One thing that helps a lot, like it's about trade reviews, right? Whenever, like, let's say your mentor takes a trade, what he watched out for before taking the trade, and how he was able to manage the trade, right? These things they matters a lot, right? So if you want to learn really seriously, learn how to trade the forex market, trade reviews, don't joke with them, right? Whenever your mentor calls you or drops a video on his trade reviews, make sure you watch it because that you are going to over time you are going to be seeing the market the way your mentor or whoever you are looking up to is seeing the market, right? So you will get to see whatever your mentor the things he's watching out for, right? His confluences, right? So I might not be your mentor, but right, um you can grab one or two from this video, right? So let's quickly get into the video. So I'll start from my monthly time frame, right? So we'll quickly do a top down analysis and then we'll jump into the trade. So let's know the reason why I took the trade, and that is it's as simple as that. So I saw on the week on the monthly time frame, I saw this. We have been on the bullish trend, but then I saw this. I saw this, right. So I saw this engulfing candle, right? I saw this engulfing candle, bearish engulfing candle that engulfed the previous one. So immediately I saw this, I knew that this trend is actually in trouble because whenever you see an engulfing candle on the monthly time frame, please don't joke with it, guys. Don't joke with it, guys. So that's it, right? So immediately I saw that, I knew that okay, this trend is in trouble. So I came down to let's go to weekly time frame. So now on the weekly time frame, actually I saw this. That I didn't go to monthly time frame when I was doing my analysis initially. So, but when on the weekly time frame, I saw this. Because I had analyzed this asset for a very long time. So I saw that the price has traded, returned into this very fair value gap on the weekly time frame, and then when I saw this fair value gap, I actually thought, okay, this market is going to continue trading higher simply because we have been bullish for a very long time, and then maybe the market just wanted to do a deep retracement into this level. Because if you go to your late daily time frame, this is a valid order block, right, that market traded into. Let me not put so many lines there, but this is a valid order block that market traded into if you go to your daily time frame. But on the weekly time frame, I won't take this as a valid order block, but this is a key zone that the market traded into. So immediately this market traded into this zone, I was actually expecting a continuation from here, right, to the upside to take out this next high. So I think me, I actually sent some trades like that to my guys, right? Previously, it's been long, I think since October, right? So I sent it. But when I saw on the daily time frame, I saw that price traded into this weekly time frame fair value gap and then gave us a shift in market structure. I'm coming. Let me. This is my structure stuff. So from here, not as if I don't know it, but then it's just make it pretty easier for me. So market was trading higher from here. High. Okay, let's. No, sorry, made a mistake right there. All right, this is a high, this is a low, and then a high, a low for me, right? A high, a low, and then a high, and then structure was broken out, right? Structure was taken out, right? So this is what a breaker block, right? Price returned into these zones, right? And then from here, price has been stalking. Price was stalking for a very long time, right? Price was stalking for a very long time. So within this zone, price was just talking, it was just talking, right? So let's quickly mark out the key zone on this very asset class, so that we'll know where, just to give us guides, right? Basically, let's know where this market is actually heading to, right? Let's know what is happening on this market. So if you draw this key zone, the first key zones you see here right now. So let's say you want to draw out your support and resistance. This is a very major key zone, a major turning point in the market, right? It has a lot of touches. It has a lot of touches. I'll just try as much as possible to make it touch a lot, but not necessarily all. But I'll just try. This is make this guy blue. If you turn it like this, so you can see that it had a lot market reversed in this very zone a lot, quite a number of times. And then so we'll just quickly take this. Let me just extend it. So this is actually basically to give us guides on our trades, like where the market is likely to go to next, or if it fails, or if it takes out a particular level. So it helps us, it guides us, right? So this is another level, right? So I want you to take note of it. This is another a major turning point in the market, right? It touched it one, touched it two, and then came right here. It didn't really do much, but then it touched it right here, and then it fell down before it came to take it out. And when it took it out, market came here and then traded here again. It's stopped for a while, right? So I want you to understand all these things. I want you guys to understand these things. It's very important you mark out your key zone, because it's going to help you to know where the market is trending into next, right? So and then this is another key zone, right? So this is another key zone, guys. This is another key zone. So we are basically doing kind of a top-down analysis. That's it, guys. So just take it that way. So let me just leave all of these. These are okay. These ones are okay. Because they are the closest right now. So let's go to our daily time frame. We can see on our uh, price was talking at where, at a what, a resistance level, right? Price was talking at resistance level, and then on daily time frame gave us a shift in market structure. This is a correct set trade, right? Price traded into a key resistance level and then gave a shift in market structure on the weekly time. So on the let me adjust this stuff very well properly. So let me adjust it properly, guys. All right, I don't want it to be too thick. It's fine, because as if we go lower to the lower time frames, it's going to bit wide, right? Too wide. So price got here and then gave us a shift in market structure to the downside. And don't forget, this zone is also a fair value gap on the weekly time frame, right? And fair value gap, we know that is an imbalance. So price traded into it, and then price gave us a shift in market structure on the daily time frame to the downside, right? So it was when I saw this, as I was like, okay, I didn't have confidence in this, like in this uptrend again when I saw this. So I was waiting and waiting for this. I was actually waiting, right? So on my daily time frame, let me quickly draw my zones on daily time frames too. So I can see this is a very cool, a very key zone on the daily time frame, right? So I normally mark my daily time frame key zones as well, so to help me to know, okay, where I'm expecting a breakout to happen and all of that, right? And I actually use my daily time frame key zones, key levels, to take my profit, right? That's where I love taking my profit from. So I'll just align this now, because all right, all right. So I think these ones are fine, right? So guys, so look at what I saw, guys. Look at what I saw. So when price was stalking. I later saw this bearish candle, this massive bearish candle. Let me show you guys this massive bearish candle that took out the last low, right? This very low that took out this very low, guys. Look at this. It took out this very low. All right, so it took out this low, right, and then it gave us a break of structure. Price never took out a new structure to the upside again. It gave us a change of character, and after a change of character, what is next? That's a break of structure, right? So after a break, though it was consolidating, and then it later came to take out the low. So right, so it gave us what a break. a break of structure. So immediately this break of structure happened that very day, and then immediately I saw it happened. This immediately I saw this happen. I went to my 4 hour time frames. I went to my 4 hour time frame, and then it was very very clear on my 4 hour time frame. Look at it, guys. Look at it. It was very very clear on the 4 hour time frame. So immediately I saw that this move happened on the 4 hour time frame. What did I do? I simply All right, let me just use this. So I actually first thing I think I did was I used my Fibonacci. So because there are a lot of imbalance right here, and where to take your entry, where to look for entry, it became a an issue of concern, right? Because I had to wait because a lot of imbalance, which is a lot of fair value gaps. So I had to wait for price to trade into the 50%, at least 50% of the range. That is what I did. Actually normally do when I see a lot of institutional reference point in a particular level. So I'll just outline that. So I outlined that this was 50%, and then this 50% was in confluence with what we have a breaker block here. This is a breaker block because it took our liquidity above, right? So and then we can see that this now where is the breaker block? This last bearish candle. I'll outline this too. We outlined that too as the breaker block. So if you don't understand what breaker block is, you should go through the channel. I have made a video on that, right? So we have that breaker block, and we also have a fair value gap. The institutional reference point at the premium in this case is what I'm concerned about, because I would love to take sell at premium and buy at discount. So look at the fair value gap here. So price traded into immediate price traded into here. It was actually evening in Nigeria time that day. Evening, I think towards 9. That was when I saw this, when the price traded into here. Let's go to our 15 minutes time, because that's actually where I take my trade from. So I'll just use the replay tool. All right, so guys, the truth is I didn't take it from here because it was a bit late that very day. It was already, this is around 6 p.m. When price traded here. I think I was busy that day actually. So when price got here, I was like, okay, I'll find this. I was like, okay, if price comes now to take out this low, then I'm going to jump in, right, for a sell. So I waited, eventually he could not take it out on time. We could not take it out on time. It gave us a new low again. This is the next low because a new high has been created. And where's the high? What's the high? What's the low that created this high? This is the low that created this new high, right? So this will shift right here. So I'm waiting. So I was asleep when all of this were happening, because this is actually midnight Nigeria time, which is GMT plus one. So I was waiting. So this is actually where immediately after this is taken out, right? A retracement, right here. I'll take my entry. This is where I'm supposed to take my entry originally, right? And my stop loss will be right here. That's where I'm supposed to take my entry, but I didn't take it from there. I won't lie to you. I didn't take it from there. So when I woke up the next morning, I didn't wake up on time as well. So when I woke up the next morning, let me quickly play it. So when I woke up, I saw that price had already done its own thing. It did its own thing, and then all right. So price was already here. I think, yeah, it was about here. Yeah, it was down right here. This is 9 a.m. Nigeria. Yes, I was already awake this time. So price was here, and I was like, okay, if we must continue going downward, then this low should be taken down. If this low is taken out, it confirms that we are going to have a massive sell, right? So I was waiting. So eventually the low was taken out, and immediately the low was taken out, I took my entry right from here. And my stop loss is 75 pips actually. My stop loss was 75 pips. Wait, about 75 pips. Now, why didn't I put my stop loss here? Many people put their stop losses here, but I actually did not. Why? Because I knew that manipulation could happen, because there is about a look at relative equal highs here, and because of these relative equal highs, one thing I discovered about the market is this: if the market wants to sell and then it gives us that very last swing low before the market starts trying to sell, that zone, if it's taken out, you know that if your setup is invalidated, right? But then if it's, if your, it can take out other lows or highs that is close to it, right? But that very last swing low, you should not take it out. But if it takes it out, you know that it's like your setup is not going to work out at all, right? But if it's about grabbing of liquidity, I knew that maybe this thing could happen this way. It could trade right to take out all this liquidity, and then people start thinking that he wants to start buying. So that's the reason I had to extend it, and coupled with the fact that uh my target is very very high, so I won't want to be staging with my stop loss. So that's one thing. I won't have to be staging with my stop loss. My target was about, I think, 400 pips. This was my target, 1.86 thousand. So that was actually my target that very day, right? Exactly, guys. So price traded higher, guys. I took my entry from here. I didn't wait. All when all these were happening, I was already on the trade. If I had thought that I would lose, this trade would go against me, right? So the trade later went higher. Look at it. It almost stopped me out. That's it, guys. I will show you guys the screen. I will add it to the side of this video. You are going to see the screenshot, right? And I'm still on the trade, guys. So this is what happened that day, and then the guy was talking. So let me just move this to 1 hour time frame because I don't want it to waste much of our time. All right, so the guy was just talking and I was just watching. When price eventually got here, I think it took some, I think the next day before price got here. uh I just wait. It didn't even get here. I waited for price to get to 1:2. So immediately I got about 1:2, 1:2 of my 1:2. This very zone, I took out half of my position, right? I took out half of my position. That's how I managed it. So I left the others, the remaining ones to run. That's the reason why you still see my trade is still running till date, guys. So you can see, so the trade is still on. Let me just move this to 4 hours so you can see where we are currently on the trade, guys. So you can see where we are currently on the trade. So this is where we are. Pass. This is almost take profit. Oh, jeez. I haven't been checking. So we are almost hit take profit already. So definitely we are going to hit take profit. I gave this Euro USD signal on the group chat. So if you have not joined, make sure you watch out for the description or the link on the description so you join our community, guys. So this is the trade, guys. So if you like this kind of content, make sure you comment so I'll keep on making this kind of content for you guys. Thank you.